Hey guys, how is it going? So, just wanted to make the short video of my outlook for next week. So this is my watch list, my top 6 and additional pairs. Did get quite a lot of messages about some positive stuff actually, and a lot of people, which was really cool actually, reaching out saying that it was nice and how they utilized my videos before and how they really enjoyed actually doing it. I actually had one person who said he woke up at 3 a.m. on multiple occasions to watch my videos, which I thought was really nice. So yeah, no, good for you. I mean, definitely that sort of consistency definitely will take you so far when it comes to trading, you know, not waking up at 3 a.m. In particular, but that sheer determination to learn. And I think, you know, if that's something that you are striving for, drop me a DM, you know. I can put you in the right direction to definitely utilize your energy and your thirst for wanting to be a good successful trader, because there's tools and resources out there for a lot of people like yourself, but I think the major thing is most people don't know where to obtain it, and they need someone to point them in the right direction. And I think in this day and age, there's so much misdirection in the market right now, especially with so many prop firms popping up and so much opportunity in the market with this illusion to make money. You have to remember it's not sustainable, and it's not guaranteed. Like, they make it seem like it's very easy, like, yeah, okay, you know, all you do is do this and then you can like, trust me, if it was that easy, you'd see so many rich people running around. But you know, the odds are a lot of these people, and I know this because it's what I've been taught, and once you kind of understand how trading works and you can trade a particular strategy, you start to understand that a lot of people, they make a lot of money but they lose it just as quick as they make it. So don't believe in everything you hear. So jumping straight into it, let's go with the technicals. I'm not going to do all the fancy stuff today where I put on the, you know, the flashes and stuff. I'm just going to jump straight into it. So the DXY is actually very interesting. So personally, I do like this a lot, because when I see this, I'm seeing we've basically retraced 50% of this move, and I'm going to go to the weekly. So if we start at the weekly, we can see over here that, you know, okay, yeah, there was this point all the way up here, which is not necessary, it's quite far away, right? So we disregard that. We can look at this little interesting point over here, which is just a formation of liquidity, and then how we came into that with this larger structure of this 1 2 3, right? We can fully understand that. That picture is very clear. So we have a little bit of liquidity sitting in the market there, where price gravitated towards it quite aggressively, but because of the aggressive momentum, consider a man running really quickly, you can't just simply just stop always. Perhaps maybe the guy stopped, tumbled a little bit, and then started to pull back, and that's what we were seeing over here. And then as we aggressively started to short, we started to correctively move sideways throughout 2023. Now, this isn't necessarily the worst thing, because there was an abundance, and I mean abundance, of opportunity in this little run alone. And I think that if you do have time, it's worth analyzing that, because I think the amount of things that you can learn in that alone, you could probably develop a strategy, really and truly. But just wanted to point out, obviously, don't go off and try to develop a strategy. There's plenty of ones out there that work. Make loads of money first, and then think about what you want to do next. So literally, you look at that beautiful, absolutely beautiful run here. You could analyze that, and I'm not going to do it in today's session. Maybe in a future session I might do it with Euro USD. But honestly, the amount of opportunity within here was incredible. If you don't see it, man, you need to study it, because I'm telling you, right, honestly, there was just so much in there. Like, you couldn't make it up. That's the worst part. Like, you know, it's all intentional, deliberate price action. You know, it's just, there's so much in here that I think, like, one person by themselves couldn't just, yeah, honestly, like, just study it. Honestly, when you see it, you'll see it and you understand it, and it's phenomenal. So what I'm currently looking at is, this just looks like continuation to the upside, really and truly. You know, we came into the 50% rule. There's a little bit of liquidity sitting above it, but looking at this, we do have enough to sell off, because we did come from the 50%. We did create this sort of internal 1 2 3, and we started rejecting. So that's why I'm quite neutral at this point. and I'm not fixated on seeing this as a long, even though we do have this sort of larger structure here where we have a 1, 2, call this a second touch here, and then 3, 4 touches even into a value area. But the truth is we either get a strong rejection away, close on the daily, continuation, and we're off Tuesday, Wednesday, or we push through and we continue, break through VA1, break through VA2, start creating a larger continuation down here. Perhaps maybe it'll be a little bit steeper in the sense that it might be a 3 touch or even a 2 touch, which is not uncommon, but I would be preferring the 3, of course. And then we'll see that over here and then see how it formulates and then take advantage there. But because of how far this has run so far, I wouldn't be surprised if we do see some correction where we currently are, but I'm not interested in that, to be honest. I'm interested to see what happens next, because we are sitting in a very pivotal point, and it's interesting because when the weekly candles usually close, they usually close in a area which can cause a level of indecision, and I've noticed it quite a lot. And sometimes you need to realize that on a Monday morning isn't really the best time to be pulling the trigger on trades. You know, usually Wednesday, Thursday, Friday seems to be some of the better days, but not to say that you can't make money on a Monday, Tuesday. Sometimes Tuesday can be the day as well. It's just sometimes Monday's not really the best, because it's kind of like on the Friday a lot of liquidity was injected out of the market, so people were closing off their positions and stuff naturally, avoid slippage. We have a war going on even outside the war. Still a lot of people trade. They trade from Monday to Friday, close off the positions, review the week, work on the next. Straightforward. Some people hold longer. There's so many variations, but I would say one of the most important things here to learn today is that you don't want to be one of those people who are literally just glued, you know, like this. You literally come in here and you're just glued, and this is terrible. There's probably someone in this, like, who's looking at this right now, and when you look at that, you don't see all of this. And this is something that I think Vanch, one of the followers on YouTube, messaged me about, and he said this as well, like, you know, how being so zoomed out sometimes is just so clear, and it's a better way of trading. Because I don't know about you guys, but there's a lot of people who've reached out to me and said they trade options, and I'll be so honest with you. Number one, options is not regulated by governments. They don't regulate it because they consider it as gambling, right? Because when you think of it this way, you can make money, yes, and you can make understanding, but the problem is when you start looking at a time frame, this is the 1 minute, for example, right? And then what happens is you start zooming and zooming and zooming and zooming. Don't catch me wrong, I used to do this a long time ago, years ago. And then you're looking at things like this, you know. This is how your outlook is a lot of the time. Like, you're zoomed in this much. That's a minute chart, guys. You know, don't get me wrong, you'll be like, oh yeah. And in this case, it did play out. But the thing is, you wouldn't even know why that played out, because you're so zoomed in on the minute, right? You're not thinking anything above the daily at all. And if, you know, just by simply understanding the daily and what happened here, you would have been able to anticipate this anyway. So even if you were to utilize your 1 minute, very risky of course, you might have had a much better chance of utilizing that 1 minute, but by understanding this. So it's a doorway system for me. You know, weekly, daily, 4, 1, 15, 5. You know, I've dabbled with other time frames like 8 and stuff. Once again, it's not always necessary, it's not needed. You know, there's more than enough for you to make money. When you make the money, then you can start deciding on what else you want to do, but really and truly there's no need to change anything. Over here we can see that this is for USD CAD. We have a little push down, strong push down from that override area, which I like. I love how the candle closed on the weekly there. Looking at it on the daily, likewise, very strong price action going to the 4. Now I'm just going to look for clear corrective behavior. Even though we have that strong momentum, I do want to see price action kind of giving me some sort of correction to continue to the downside. I'm not bothered if it's a 2 touch, as long as it has an internal structure within it. Corrective price action I can kind of deal with. It's just, yeah, I want to see something significant. In this terms of momentum, I would say 2 touch is more probable. I wouldn't be looking for a 3 as such for a larger fraction here. I'd be looking for maybe a 2 touch and then within that internal, but I think that's pretty much as good as it goes. The next one is very, very similar. So if we look at the weekly over here on Euro GBP, we can see here that we had a point of liquidity. If we just mark it up there, point of liquidity, and we wicked through it, and then we evening starred below it. Sometimes these do come up, so there is an element of risk to it. But then when you look at it closer on the daily, you can see that, okay, there was more than enough opportunity. We hovered around it. We just couldn't get any more momentum to the upside. And you can see how many times, like, we pushed up, we sold off, we pushed up, sold off. And there's just that wicking nature as well. That indecision between that just built up enough volume that it didn't really need to tag up any higher, because I believe that was more than enough of a build up for this now to start pushing. So if we do get continuation below this line in the sand, this is where I'll be looking to go short personally. 2 touch, absolutely, still possibility there, but more than likely I would be looking for, you know, something clear on the 1 for sure, just something like that. You know, give it some time to develop, let it kind of play. But I think this is probably one of the best positions we're going to be having next week, so I'll definitely be keeping my eyes very, very sharp for that one. The next one we'll be looking at is Euro USD. Euro USD as well, likewise. Let's see here. Euro USD is looking pretty good. Like I said, this kind of falls in line with the DXY. As we look, just going to invert the chart. We can see over here we have a hook point, and we're just aggressively pushing into that hook point. If we go quickly to the weekly, you can see that, and I'll just invert back. We can see that that momentum is kicked into the market. Strong body candle. This area is more than enough for this to start going back up. So in that case, DXY going down, and then counter related pairs, USD related pairs start going down as well. Haven't really got a lot on here, to be honest. It would have been strategic to place myself with a lot of US related pairs, but I just couldn't find something which matched with the other PA that I was looking at. But like I said, if we're looking at some point next week, there is a particular amount of news as well that's, I think, is really going to set the bar. And you know, starting the week strong, we're going to have to just see how that plays. Obviously, yes, there was NFP within this candle here as well. That makes more sense as well why we did push with aggression. But there is a bit of US news almost, yeah, so on the 8th, 9th and 10th. Yeah, we'll see how it develops. I think, like I said, there's some opportunity in there. This is an interesting point that I'll be looking at, and yeah, we'll go from there. So like I said, it's too early to tell for me. It's a very neutral point. We either go up, we either come down. Even so, we can take advantage of it. We just need a minute to take advantage of it. Just gonna quickly respond to this message as well. So yeah, GA is the next one. I think GA definitely, out of all of them as well, definitely is a little bit more higher risk, just because we haven't fully developed on this yet. But I did opt in to put it into my watch list, my top 6. Why? Because that corrective price action, this is just one big range at the moment, and if we look at it on the weekly, we still have room to come up to the high value area up here, but there is more than enough for this to sound continue, absolutely. However, when I look at it over here on the daily, yeah, we correctively pushed higher, but then we correctively came back down. Yeah, it's very strong impulsive price action, but we're just correctively moving. And what I'm really looking at now is this just a range, a larger range to accumulate value, but where would be the best place to place myself in this range? And it obviously would be at the tops and the bottoms of this range, but if we do get a tap into the bottom with a 1, 2, 3, and then we push away, and then we create continuation to the upside, I'll be more inclined to look for a long, because we may even come and revisit this point up here, giving us this. And I think this is definitely still a possibility. You know, price then comes up here, and then we have this arcing nature here, and then we could see, okay, do we sell from that? Is that a possibility, or do we just continue going to the upside? So like I said, it's positioning. I think positioning definitely is really good. The sequence is very off on this one as well. You know, the correction is just way larger than the impulse at that point if we do get to this point. So that's why I wouldn't be looking for the short again, but I would definitely keep it in mind. There's a lot of variations for what can happen. This could also become some level of an expanding, which works as a impulse or a correction. So at one point you'd be kind of drawing that on and looking at that. So like I said, give it some time, let it develop, and we'll see how it goes. But as we can see, that this is pretty much a corrective middle section now. When you do look at it as a potential expanding, that would then be your corrective middle section. So like I said, it has some potential there for sure. The next one is Aussie dollar. Aussie dollar is looking really good as well. I mean, look, we've tapped into this hook point over here daily. Look at the daily momentum, strong momentum to the downside. Yeah, there's a little value point up there as well. Not so necessary at this point. We might still even be able to play a move even into like this area over here, which could definitely bank you a decent amount of percent. Remember, if you're scaling and you're looking at trading a funding account, you only need a few percent to get to where you need to be. So don't always be thinking you need to catch the bigger moves right at the top, right at the bottom. There's so much moves in abundance here. Like I said, if you want to really study that, go onto Euro USD and study that last recent leg we've had throughout this year. Over here, yeah, so we've got the override low, which is technically working as a line in the sand, looking at a correction below it to see if we can get continuation to the downside. Very straightforward and simple. Really like this setup, and yeah, it's not bad. Understanding that this could pull back and go higher, that's always a possibility as well, but I'm not too worried about that right now. We'll deal with that when it comes, if it comes. More than likely, we look like we're moving in a level of momentum with the daily, and that's what I really like about it. So we're going to just see how that formulates. The 4 hour, look at that 4 hour candle closes as well. It's looking really good. A correction above here I wouldn't entertain as well, just to kind of point that out. If something did formulate up here, I'm not bothered, because then that kind of plays this 90% rule. Have we already kind of filled this in to move higher? Maybe. But if we start pushing lower, and then then this kind of opens doors for so many more variations of what this can really start becoming, and then we're looking at the larger structure again. So that's why I have that on watch. And then I think this is the last one in my top 6. Nope, it's not even in my top 6. This one is in my additional pairs. So I did have only 1, 2, 3, 4, 5 top 6. So it's top 5 this week, and then top 5 for my additional pairs. Sometimes less is more. It is what it is. Didn't even count it, didn't even check. Was just happy with it. So let's go back to the weekly. What we can see here on the weekly, which is really nice as well, once again, strong momentum, and it's interesting because we're not just seeing it on the US related pairs, we're seeing it across the board throughout everywhere. I think, and this is something that I overheard through one of the videos I was watching, was we're at that point, we're at the end of the year, so a lot of people either come back to the markets and they're very serious, they want to end their years on a high note, etc. And the markets tend to shape up really well towards the end of the year, setting up for a very good next year. So I'll definitely say stay sharp, definitely look out for good opportunities, and don't rush into something. That's some very good advice there. Don't rush into a trade, just look for those really good trades. There's good trades everywhere, just you're not always going to be able to get every trade, accept it as you start. Strong daily, but when the trades do come, take advantage of them, like these ones. You're seeing the momentum runs. When you see these momentum runs, this is when you want to kind of consider, how can I get involved in that? So we're looking at the daily. Daily's closed phenomenal, very, very nice full action there, like that a lot. Going to the 4, likewise. Now it's just time for a correction, like we can see over here. Price leaves clues, and that's what I really like about it. We go to the point of sale there, we can see that we sort of correctively went there, and I'm just studying the previous price, but we can see that we didn't quite complete on this one. So we had this, and I think this one subjective, because you have that little point above, right, this point over here. I think you would have then either had to mitigate against that risk, which if you took the trade here, which I personally wouldn't have looked at that entry, but maybe that one would have been actually a little bit better. Or the second one there. Yeah, come on, 78 pips. It's not really my cup of tea, to be honest. That's something that you're going to have to think about yourself, really. But I can understand that trade. I can really understand this. And it makes sense. Like, that's the good thing about it. Like, if it's deliberate price action, it's good price action, because it's intentional. It has you can crunch the data and understand why it moved, how it moved. But it's even better to understand that I wouldn't take it and why you wouldn't take it, because you're more specific with your entries and what you would take. And I think that's a very, very good element to adopt as a trader, is to be able to identify something that could have made you money, but understanding why you wouldn't have taken it and accepting the fact that you didn't take it or you wouldn't have taken it for those list of reasons that you would have accumulated during that period. And then that would refine you to be better and better over time. And then maybe in the future, if you did improve or you got better, and then or your account grew significantly, you could then adopt certain data from that could then make you want to, you know, incorporate maybe a riskier trade here and there. So I think, like I said, there's a lot of the trades that we look at are subjective, and I've noticed that now, that a lot of trades can be subjective, but at the same time you have to realize that you need to be picky. Like, you have to be picky, because you'll be spoiled for opportunity sometimes, and when you're spoiled for opportunity, you know, sometimes you can say to yourself like, oh, okay, yeah, I could entertain a trade here, right? But then the question is, we could all entertain a trade here, but then you have to really think about it, at what risk. Like, okay, fine, this one happened to play out, but many times, you know, you would take the same trade. You know, you could have taken the trade. You could have taken the trade here. And if you took the trade here, you would have been taken out, and then you would be like, oh, okay. And then it sold off. And then you took the trade here, and then it sold off, and then came back, and then you were like, oh, I took a break even. I was trying to hold it forever. Like I said, everything that I just described is all subconscious. That's all mental game. So that's something that you have to kind of then think about. Okay, do I need to then start investing in my mental well-being? And the reason why I say investing in the mental well-being is mainly because a lot of people don't do it. And I didn't do it for a long time as well, to be honest with you. I just didn't kind of understand. Like, I would always buy some supplements here and there, and read a book here and there, but it wasn't really targeted, you know, towards what I was doing. So I do take some supplements, you know, quite a few of them actually. I keep them on my desk just as a reminder to take them when I need to take them, because it's easy to forget things sometimes. Yeah, it usually just helps me with focus, you know, gets me on point with what I need to do. Different level, you know, you might already be feeling 100 and be at full flow, but if you add that little cherry on top, you know, you can get even better. You know, you reach these new levels, and it's not like anything that's addictive and bad for you. Like, they're mushrooms, they grow from the ground. They're not like it's not like some sort of drug or something. It's just genuinely just something that helps with your cognitive flow. There's loads of stuff out there, new things that people are trying and testing, but I don't want to go with anything lab grown or this and that. I'd rather go with something that's natural, and I know that definitely won't have any long-term damaging effects. Yeah, I might miss the day here and there, just on purpose. Everything intentional, but usually taking it at least 6 days a week, you know, 5-6 at max. Definitely can feel the difference, and I'll say, like, even after 3 days you'll feel it. And it's just the way you think, the way you listen, the way you apply, the way you absorb knowledge. Because I watch a lot of video content, probably likewise yourselves watching this now, and you want to take as much data as possible from it, but the only way to do that is, you know, sometimes, you know, your lifestyle might not really cater for that, and you need to make small adjustments. But sometimes when you're just sitting there with very good intentionality towards learning, you know, you add those little cognitive little tweaks on top, they make a massive difference. So just wanted to share that. Not quite sure, but yeah, so just quickly looking at EN again, just wanted to look at this. So daily looking very, very nice. 4 hour coming in here, just looking for corrective price action to come back into one of these reference points, and then we go. This one conveniently kind of taps into the retest of the low there, so I wouldn't be surprised if we did kind of just extend a little bit more, but that's even still quite good. And then we just push back in, just kind of retesting the back end of all of this. That's always a possibility too, so we have to always cater that into our trades, is, you know, the last correction of where price responded from. So where did price last respond from, and then where could price respond from now? So anticipating that in advance, we can then see it, you know, look at this level over here, for example. We came in, we corrected over there, and then we created this little footprint as well, where we kind of pushed through it and we pushed back in through it. And price just repeats itself. You know, you can see it again over here, price came back, retested it over here, price came back and retested it. So this is just something I want to let you know about, because you might get into a trade and aggressively move your stop below it, but then if you're not looking at how price responds, this is EN for example, right? Price is responding to the previous low of structures, so we can see that there could be another opportunity here. So yeah, you might have missed this impulse, but then, you know, if we pull back, there's a possibility that we'll pull back to this area. Once again, we impulsed, oh, I missed my trade up here, no worries, price came back in a formation of a 1 2 3 into that to sell once again over here. So like I said, there's an abundance of opportunity. It's just your perspective. What are you looking at? Why are you looking at it? And so forth. So we may see something similar happening over here again. If it does happen, you might be in for a run. You might be even, you know, not seeing this as the potential, but this technically is pretty much this, you know, it's coming back up, it's going to retest into this, and then boom, we look for the sell. And if it doesn't, we look for the next opportunity. And it's simple as that. Make sure you have a very straightforward trading plan, and I'll go into that towards the end if I get some time. Override, so I'm looking at this is more for anticipated one for later, could come in Thursday, Friday, but you know, I'm anticipating maybe Wednesday-ish if we do get some impulsive price action. Looking at this on the daily, I am looking for the long for sure. I'm looking to play between this range, right? So we're playing this range play. We have some good momentum, corrective price action, but I'm looking at this as one larger correction here. So if this can come in here, this would give us enough momentum even to potentially look for the insurance entry quite early on in the run, to then look at this as a mega move. This is a lot of accumulation in here for this to move, but I also understanding there is more than enough right now for this to move higher. But I am going to be keeping this quite specific to be looking for that trade there. Euro Aussie, I do like Euro Aussie a lot, actually, I'll be honest with you. So I'll show you this, right? There's the head and shoulders over here, okay? We have this little hook point over here, which I'll just quickly rein in a little bit because it's overlapping with my text. So, and then we have the head and shoulders over here. So left shoulder, head, right shoulder breaking above, pushing back in aggressively. Love that, right? And we'll just take that off. There was a trade in there as well, and then there was a lot of trades. Like we can look at that at a different time, and then we can see on the 1 hour. So we can see with the 4 hour, we've come in with strong momentum. We pushed through all of this. All of this price action is slightly more irrelevant. You don't need these structures drawn on. What we just need to understand is we've broken through this, and now we're trading below it, and we're trading into this inflection point, but we haven't quite tapped into it. And then there's that inflection point there, which is more for value area, to then look at it go lower, because that's the beginning of this massive correction. So that's where I'm kind of looking to play the trade into, and then see what happens from there. But more so, I would look at it like this. We've broken through this inflection area, right? So if this was going to then develop into something a little bit more complex, we could have then had something on the line of, where's my tool? There it is. Could have had something like that, and it could have gone higher, right? If we were to go higher, of course, but instead, actually, we got something completely different. We actually completely pushed through it impulsively, which is really nice, and now we're correcting through it. What I'm seeing over here, and I'm not looking for the counter buy because it's not really the type of trade I want to entertain, because there is more potential for the short, and the high time frame could take over. We might not get the immediate entry, but because of this, how corrective this is, I'm going to be looking for this to come back up one more time, tap into this area here to then sell. So that's basically keeping it very simple. We could see something internal a bit smaller, but that's not what I'm looking for. I will be looking at that value area, which is the green line at the top, for it to then go there. Most probably the risk entry would be very applicable, but it will be case by case. I would have to check it situationally to see, otherwise I'd be taking that insurance entry. Pushing a flag. So what I'll be looking at right here on EJ. Now EJ was one that I filtered through the yen pairs. The yen pairs are all looking pretty good. They're all doing their thing. EJ's not the best one, but for sure it does have potential, because if you look at it on the monthly, and I've seen this quite a lot with EJ, is we have this high value area. I wouldn't be surprised if we just either trickled, but in good bullish momentum and we came to the high, not like wiki sort of crazy momentum, but we just started either like soldiers moving to the upside, or we get there pretty impulsively. But I think looking for the upside is definitely what I'll be doing. There is the possibility for the sell, absolutely, you know, but I think that override, the higher time frame will take over and we will probably push higher. Drilling down into this, I want to get very strategic with it. This is one that I was kind of saying earlier in the video. You know, Monday's not really the time you want to be taking a trade, ideally when the market opens. However, sometimes you've got no other choice. You know, it's just timed in. So Asian session, there may be a trade in here. I will be sleeping, but I'll look for future trades anyway, regardless. It's just good to know that these play out. And then in the future I'll learn from it, and then maybe I'll decide to wake up early. Who knows? Maybe I'll decide to sleep earlier and then be awake during it. Who knows? But like I said, right now this is not a trade that I'm going to be entertaining straight away, but I have forecasted it on here. So what I am going to be looking at over here is to see if this will shape up for either Tuesday morning just after swaps, or even Monday. But like I said, a Tuesday trade will be better for me, to be honest. There'll be enough accumulation in there for me to look to go higher. The volume, the structure, everything will be set very, very well. It's just, like I said, these things take time. They need time to develop. Could be an Asian session trade for sure. Wouldn't be surprised, but like I said, we'll wait and see. 4 hours looking pretty good as well. Like I said, this is just the section where I'm going to be looking for the flag. Could be a bit larger, could smaller. Likewise with all of the flags that I've forecasted, you know, it's just a variation of multiple flags. It's just a variation I chose to demonstrate on the charts. But you have to understand that when the week starts, I pretty much clear off the drawings anyway, and I already know what I'm looking for because obviously I did the work. And when I was new, I would leave it on, but sometimes I'll tell you it doesn't really work for you all the time. Reason being is you need to refresh them charts a lot in the morning when you do your forecast. Not the whole thing, but just that analytical point there, because things evolve, variations change, data changes. Your bias is then stuck in a market, in a revolving market of endless changes, and then all of a sudden, because you didn't evolve ever so slightly, you either missed a trade that could have changed your portfolio for the better, or you could have then taken a trade that would have been pretty bad for your portfolio as well. So you have to kind of understand those two aspects as well, and I think that comes from experience as well, but definitely something to think about. So this one's very straightforward. I'll just be looking for a clear continuation pattern to the upside. And then USD Swiss, I do have another pair in here actually. I did find it, I left it in Softwatch, but GU, I think if you're really serious, you know, and you do watch a lot of these videos, I'd be interested to see what you think about GU. So if you analyze it and send me a picture, I'll be very interested to see, you know, how you analyze it. And I think that'll be quite productive as well for a lot of you guys watching, because a few of you mentioned like you'd wake up in the morning, you'd copy my analysis, which I don't necessarily say is the best thing, but it's better than probably not having a clue about what you're doing, and then basically just tweak it along and so forth. But like I said, if you're kind of in that sort of gradual growth stage and you're learning, send me your forecast. Send me a picture of your daily, your 4 hour, and your hourly of GBP USD, and I'd love to know what you think about it as well. So looking at the weekly on USD Swiss, it's basically got some good momentum, 3 solid bearish candles, and then we got like a bullish pullback and then another solid set bearish candle. Going to the 4 hour daily, sorry, going to the daily, we can see that we rejected. We've got nice bearish momentum here, and we create this sort of range. So I am looking to play this into this level here, but it probably could go through it if the DXY does commit and we start to sell off aggressively. So I'm not too concerned about that ray line, just aware that we could override over here and push back up, but more than likely if the DXY does start to commit, this will go with it. looking at this on the 4, we can see that we have very nice momentum, and this is one of the reasons why I decided to opt in and put it into my additional pairs, is because of that nice momentum we're seeing on the 4. And then going to the 1, we can see off the back of that there is like a small reference point there where I will be looking to see if how price correctively comes back into it, and if we're going to be looking at a 2 touch, or maybe I might even opt in for the 3. Most likely the 3, but we'll have to wait and see if we get an internal structure there as well. And then that basically is it. You know, I think the week is looking strong, the week is looking really good. There's a lot of potential, a lot of opportunity in the market, and yeah, I think really and truly, like, don't sweat it. Like, there's so much opportunity, even if, and this is just some advice because I've spoken to quite a few people, is if you've blown an account, don't just jump into another one. Number one, definitely sit down and deeply ASR it. I definitely put a good video out, my last video just before this one, with just some good questions you want to ask yourself. You want to journal your trades and you want to write about it, not only about the technical side, because as you'll discover over time, if you haven't already, is a lot of the things that will help you improve isn't your technicals, it's your psychological thoughts around your emotional behavior that dictates your decisions, that then revolves around the overall performance. So you need to kind of study that for yourself, because everybody's journey is different. But the main part of that is number one is, how are you journaling your trades? What data are you collecting, and how is it benefiting you, right? If you're collecting your data and you're not writing about how you felt before the trade, how you felt during the trade, and after the trade, that's something that you're going to miss out on when you start looking at your, when you start reviewing your data, because then you might be thinking, like, oh, why did I take this trade? And then when you have more data there, it's like, oh, okay, technically I took the trade because of this factor, this factor, this factor. I thought I was mitigating against this, this, and this. And then you just look at it, okay, how was I feeling in the moment when I took it? Well, I felt pretty good and confident because, you know, I was up in percentage. Then when the trades are up, I felt very nervous when I saw price move very quickly. I didn't know how to react, etc., etc. And then at the end of it, I felt pretty sad because it ran about 4% and I took a break even. And then in that case scenario, you can learn from it, right? Because if you see that as a one trade, okay, you might not pick it up straight away, but the second or third or fourth time you see the same thing happen, where I took a trade and it came and took me out for break even or minus, and I could have taken about 3%, but I didn't. You could then systematically say, okay, well, if I run to 3%, naturally, despite what's going to happen in the charts, I'm going to lock in 1%. Just because. And then you've basically solved that issue, but then you have to ask yourself, am I going to create another issue for myself? Maybe. So where am I positioning myself in the markets that's going to benefit me? And then you start to look at it statistically. Well, you're actually making some money from not making that mistake anymore, not losing money, so that's good. The next one is, you know, something simple like if you run into 1%, you're going to lock in a break even. It's not always the case, and it's not always necessarily the best thing to do, but it does help you in the earlier stages not to take as many losses anyway. But like I said, that's something, these small tweaks, you know, like I found a lot of my issues recently when I did my DFASR was just in relation to my trading plan. I just didn't have enough clarity, I would say. There wasn't enough clarity on my entry criteria, or more so, I had too much, and because of that, it then affected my results in a negative way, because sometimes I was looking for too much. Like over a period of time, you might realize that you add, but then it gets to a point where you should be decreasing. And when I say decreasing, I mean more sort of compressing. So you're merging your confluences into the highest confluence, and then you're making it the best possible confluence possible, which then forms a better benefit for you. And I think about that really is, you know, if you could summarize one type of entry and you could pick 3 of the best confluences, 4 at maximum, that make that trade the trade, right? And then compare it, and then go and look at, go do some data collection, 3 examples as a minimum that fit exactly what you said, that ticks all 4 of those boxes or 3 of those boxes. And if it fits, it works, great, good stuff. You know, if it doesn't, then think about, could I have replaced that? Look at the similarities. Could I have replaced any of those with something else? And then, you know, obviously you want to go down. You want to give your, like you see me doing with the doorway system. You want to be doing that with yours as well. Like, what gives you permission to take an entry on the 15? You know, if the daily and the 4 hour or the 1 hour is not even shaped up, or doesn't really give you like enough, then why go to the 15? And you need to ask yourself that. A lot of you guys trading options as well, you need to ask yourself that as well, because you're gambling. Like, you know, don't lie to yourself, you're gambling, because if you knew how to trade, you wouldn't be trading options. You could trade options, yes, but you'd be trading CFDs, which is contract for differences, which is basically what you see me doing. I don't trade options, I don't trade the minute chart. I have, but I don't, because I know the difference and I know why you don't want to. So guys, I want to kind of end this video on a good note and just let you know, like, if you are struggling in your journey, or you really want to be serious about trading, you know, don't literally sit there alone. There's communities out there, there's people out there like myself who are more than happy to help you and point you in the right direction. Like, don't put yourself in a position where, you know, you're failing a funding assessment, you're doing it again and again and again. Like, be honest with yourself. Like, can I learn to be a good trader from other good traders? Yes, you can, 100%. Do you want to trade in a way that your trades are very similar? Like, I promise you this, right? If you look at my my trading plan and you look at my trades, you're going to see so many similarities. In fact, over the course of now and March, you're going to see so many similarities from my new trading plan that you're going to understand why there's significant growth. And I think that's a very beautiful thing, because I've gone off and done the data collection and I'm consistently doing that, which has built a lot of confidence towards taking the entries. Yes, there's a lot of misentries as well, it happens, but more than likely you have a bulletproof trading plan. And in that bulletproof trading plan, you literally have a particular type of setup, right? And that particular type of setup could be anything, right? Let's just look at this one here. So you've got this as a value area, then you've got price. Let's say price did this, came back up and did this, right? Then you know that when price comes into this area here, that's where you're going to be looking to buy, right? So you're always looking at significant point, push away, right? With the potential for this to then evolve into whatever, right? And then you're basically looking at this. So what you're waiting for is basically that. Okay, that's your entry. So you're basically just waiting for those entries. So what you're doing here is you're waiting for price to tap into the ray line. So take away the trend line. We don't need the trend line. It's just there for a little bit more confluence, but like I said, it's not needed. You're waiting for this. It taps in. It then pushes away aggressively, right? Then you see this, and boom, that was your trade criteria. Okay, cool. You might understand that, you know, a week you might go by, you might only see one of these. 2 weeks might go by, 3 weeks might go by, you might only see 3 of these, right? You might have missed 4 of them on top. But there is these trades. That's the thing you understand. Systematically, historically, there is these trades. So all you need to do is wait for those. And you know that statistically, if I wait for these and I take these entries, and I know how to take them very well because I've practiced and trained, over here alone, oops, I did that the wrong way around. Over here alone, what do we have? Say you took it with 12.5. Yeah, into that high there, you're looking at about 5%. Right, I don't personally trade on full 1%, but I'm just saying, if you were trading on full 1%, that's 5%. Right? Then you rinse, repeat. You do that a whole bunch of other times, right? And then we look at your trading plan. And then what happens is when you look at the trading plan, what do you see? You see a whole bunch of similarities. You look at your trades and you're like, oh shit, okay. All 3 of my trades look the same. Like, not exactly the same. Obviously these are exactly the same, but they're not always going to look exactly the same. They're slightly different variants, but you can see the similarities there. You can see the understanding, and then what you then end up seeing is you collect all this data, and then you look over it again and again and again, and you start to refine it and learn more and more about your entry. And then what you realize is, say this was a 30 pip stop loss, right? And you were taking trades like that. Then you start refining, and then you start getting better and better, and then your 13 becomes 10. And then your 10 now, your let's say that was a 5% position, that now becomes an 18% position. Just as an example, right? It won't be 18, but it'll be something like 9, 10. But like I said, those are the sort of things that you want to be thinking about, and that's how you want to be thinking, and that's how you want to be improving. So one mistake I made, and I hope this is definitely going to help you, is don't put too much in your trading plan. You know, don't put too many time frames. Like, keep it very simple and straightforward. Don't overcomplicate it, because you're not consistent yet. And do it when you're consistent. You can then think about, okay, fine, let me add this, let me add that. Some people do it when they're not consistent. I get it, and they do get consistent. You know, it doesn't mean that you have to take them all out and listen to everything I'm saying, but just understand, like, you might understand this and see this, but it doesn't necessarily mean you have to take it. There's many ways you can take it. You could take it, you know, you could take it from here if the risk reward is okay, fine, fair enough. You could take it in here at the risk, fine, you understand the risks that come with it. You could then even look at something else where it's in here, 2 touch, before you even knew it was a 3, and then so forth. You know, I don't know how some other ways you could take this. I mean, those are pretty much the only ways I would look at it, but I just want to kind of share that with you. There's a lot of possibilities in the market, and there's so much that you can really gain from this. And if you are struggling with trading, it's actually much easier than you really think, and you just need to get the right guidance. So if you are looking for the right guidance, just drop me a DM. You know, you can @ me on Instagram. You can find my Instagram if you go onto my YouTube page, and there's a little links thing with a link tree. Click on that, drop me a message. I'll be more than happy to point you in the right direction and help you out there. So like I said, guys, I wish you guys a good week, and yeah, good luck trading this week.